Good day, everyone. Ali Safi here from Safi Financial Network. Today is June 19, 2024. Market was closed today due to Independence Day in US, but futures market were open. So before getting into futures market, which very light volume, actually just the indexes didn't move that much. The only thing that they have for today is silver. Actually, silver, we see some kind of like a sign of a breakout for silver to the upside, and that's going to be kind of like a potentially going to $33, $35, which we will get into that one. But before getting into the chart, let me just share my screen because there are different charts that that are very interesting. I just want to show with you today. And this is the first one. So this is a market breadth compared to S&P 500. So market breadth is in blue line, S&P 500 is in orange line. And as you see here, market breadth usually goes down or up prior any significant movement. For example, this is market top in 2020, beginning of the COVID crash. Market breadth just go down kind of like before, kind of seeing divergence here before the market collapsed. And then market collapsed, obviously, after that. They both bottom at the same time in March 2020. It goes higher. And here is another scenario. Market went into bear market like at the beginning of 2020, 21, 22. So this is kind of like a bear market in 1 year almost. As you see, market breadth just showing the top here, going down. However, market S&P 500 goes higher and higher. And just after, I should say, let's say April, this one is topped until all the way to 2022. In 2022, S&P 500 started to roll over. And as you see here, market breadth just shows us a very nice leading indicator, just going down while market went up. And then 9 months after that, I believe 8 months, 9 months after that, S&P 500 roll over to the downside. So that was kind of like an ending, kind of like an end for everything. Like market breadth goes down, S&P goes down, like they're just coming along to each other. And here's the bottom, as you see here, they just bottom at the same time at the very important level. So these are my important level for market breadth as well. Right now, I should say, market breadth again start rolling over, so going down. It doesn't mean that market S&P 500 will go down significantly, but we will see obvious divergence here. So this means market potentially here is due for corrective move or something like this or this. So whenever we see this type of divergence in market breadth and S&P 500, so this is market breadth while S&P 500 goes higher. And here is another scenario that we are just currently experiencing. This market breadth goes down while S&P 500 goes up. So this is kind of like a warning signal for everyone that everyone needs to keep an eye on this. This is very important. The next chart that I have here is this chart, which is a yield curve. And no one is talking about this anymore just because it was kind of like a inverted while ago and market didn't pay attention. I just want to show you something pretty interesting. So yield goes down from its top while S&P 500 goes up in 3 years. And when yield goes down below zero, which is, we call it as an inverted yield or inverted yield curve, market signal for recession. And recession obviously happened in 2007 until 2009. So when yield curve uninverted, when yield curve goes up to kind of like a normal scenario, and it gets here, S&P 500 topped. So yield curve goes to sub-zero first or inverted, then it gets uninverted again, going up, and that's the real danger. Here is another scenario that we see here. Yield curve goes down, market still keeps grinding higher. And when it goes to zero or touch zero, just touch zero, later on, I believe 7 months or after, COVID crash happened, right? So here is another scenario: yield curve goes down, market just going higher, getting into 1-year bear market, then again getting back to the higher high, which I believe this is just a corrective move before real crash. But we bottom here, we are very inverted in yield curve, like compared to 2008, 2009, compared to COVID crash, we are at -1%, which didn't happen before. And right now, again, a yield curve is just forming a nice bull flag here. So if it goes higher, and if it goes somewhere around, let's say 20 or 0.20 or 0.40, then we should see market potentially will be at its top, multi-months, multi-year top potentially to have a crash or something. So this is kind of like interesting. Still, we are not there yet, but everyone needs to keep an eye on this. When yield curve is getting uninverted, we should see some kind of like a red flag, a very significant red flag in the market. Moving on to the next slide, and this is XLY compared to XLP compared to S&P 500. So this blue line is XLY to XLP, which is consumer discretionary against consumer staples. So this means people are spending money on what they want, not what they need. So this means like luxury travels, restaurants, clothes, shopping stuff actually accelerating just because people spending lots of money. And whenever this one goes down, I believe that's going to be a significant top for the market as well. So as you see here, when this chart goes down, this is going to be a significant top here. So it happens in 2020, 21, 22, and right now it is happening again. So as you see here, consumer discretionary spending, people spending less, but market keep grinding higher, at least since December, this divergence happening. And whenever this divergence happen, in a short term, usually we will get back into corrective move or kind of like a semi-recession. But right now, we don't see anything, which is very, very warning sign. I should say, if market goes down to match up with this reading, don't be surprised. And we should see some kind of like a correction, a sharp correction coming before the next rally. I don't know if this correction happens tomorrow, but this is kind of like a macro picture of where are we at. So I should say the upside target right now should be limited, and we are due for a corrective move. So if market goes down to correction, we shouldn't be surprised at all. All right, so these are 3 charts that are very, very important. And let's go to just chart for today: indexes, gold, silver, and crude. All right, let's go to chart S&P 500. Here is S&P 500 daily chart. So as I said, a very light volume doji bar, nothing happened today just because market were open. And this is kind of like the scenario that we are waiting for. Divergence between these two, and we should just see kind of like a reversal coming down to this area, which is going to be interesting correction move to 54,000, even 53,000, 5,400 to 5,300. That's going to be the scenario that I'm just looking for. I'm not looking for a crash or something. I'm still looking for a correction. And this correction could be healthy for the market, as we are kind of like seeing lots of charts are showing us a sell signal or mixed signal, at least different sectors. Right now, we are seeing a very obvious divergence in MACD. We don't see obvious divergence in RSI, so that's why this is kind of like a weak. But if you go to weekly chart, so weekly chart is different story. So weekly chart, we see in 3 indicators in a row, we see kind of like a higher high, higher low, but in RSI, MACD, stochastic gives us a lower high, which is kind of like a warning signal for me. For the weekly chart, 55.44 to 58.39, that's the top that I'm looking for. But for daily chart, we are kind of like the scenario that you see the top is there. Moving on to Nasdaq, which has another new all-time high, futures market going up and closing all-time high, 19,000 944. So it's pretty close to my 20 grand, basically. And congratulations to those folks who got into this rally. But I should say, look at here. Here is SMA 20. Here's the demand area. We're overstretched, overbought, and we can see some kind of like a pullback to this 19,000 area, 19,100. And this is kind of like the scenario that I'm just looking at for a corrective move in Nasdaq. Moving on to US 30, which is Dow. Dow coming down after yesterday doji. Today just came down 58 unit. Again, futures market, we can't just give it too much, but I should say this is kind of like the scenario that the Dow is chopping around. Pattern-wise, this is kind of like a standing head and shoulder here. Neckline, if it goes below this, if it goes below these two pivots, can go easily down to 37,000 easily. But right now, I don't see that. As long as we are above these two pivots, as long as we are above 38,000, we should be fine. Moving on to gold. Gold doji bar today, flat, just $1 loss, nothing happening. This is kind of like a choppy consolidation within this white range bar. Gold needs to follow silver. I believe that if gold follows silver, then gold miners, if it recaptures SMA 20, at least going above this area, which is going to be 2360, then we should see some kind of like a pullback, great rally to 2417. So still looking for that rally. Even if it goes down, I should say that's the minimum, maximum target of the downside. And I'm not expecting this one is getting lower than this. Moving on to silver, which had a nice move to the upside today. So silver breakout nicely. If you go to 4 hours chart, you can see this breakout actually in a smaller time frame. So this is a 4 hours chart, and obviously you're seeing silver is just moving its development to the upside. So it goes above this trend line. The important trend line is here. So if silver goes above 30, if silver goes above these two, this is a demand area, folks. Sorry, supply area. So $30 and 50 change. So if silver goes above this, pullback, great buying opportunity. I should say everyone needs to keep an eye on this demand area, supply area. I don't know why I'm saying demand, but this is an interesting supply area, $30, 50 change. Moving on to crude, kind of like a doji bar today, futures market. Crude is overstretched, overbought. We got above this pivotal point. We are just getting into this breakout zone. So choppy consolidation can lead us to higher price. Still, a crude needs to tackle 82 before tackling to 84, 85. All right, market will be open tomorrow again, so we will have a good volume, I believe, and we will see how it goes. Have a fantastic evening. See you on the chart. Bye-bye.